Okay, so first step you understood. Our basic thing, first thing is that what, when we are going to do that bank reconciliation statement, where if your balance as per the cash book, balance as per the cash book as per, if debit balance, that will be the positive balance. If credit balance, that will be the negative balance. Where is the debit? It is indirectly that added. Where is the subtracted indirectly? This is credit. Okay. Now, as per the passbook, simple, just opposite. Credit means added and debit means subtracted. Indirectly, if you asking me that logic behind it, no, simple, you think about in that when you are depositing money or withdrawal money. So depositing money, you are writing what? Bank account debit. That means bank receiving that money, you are paying cash to cash account. So as per the cash book note, to cash account, it is from your account, it is subtracting, and the bank account, it is adding. Simple, from one place it is going, another place it is adding. Clear my point? So
Yes, sir.
cash subtracting, because of this, as per the cash book, you could find out it is credit. And the bank adding because it is a debit. Exactly passbook way, if you're thinking about that, just opposite. Okay. So passbook, credit means add, debit means subtract. Okay. First point over. First thing we understood. Bank reconciliation statement, when we are doing, our main motive is to find out the discrepancies between the passbook and cash book. Okay. So
Yes.
bank statement, they are maintaining one book, that book known as passbook, but where the company maintaining that book known as the cash book. Okay. Now, need and importance of bank reconciliation statement. Very, very important as per MCQ's point of view. Okay. So can be bank reconciliation statement is an important statement prepared because of point number one, errors. If any committed in recording transaction either in cash book or bank statement or bank passbook indirectly, so that any error in between that anywhere have done, definitely you can find out by checking of both. Next, undue delay in the clearance of check deposited is known from the reconciliations. Now think about that. Say I have deposited a check into a bank and the bank credited that money in my bank account taking 3 days time. But when I am a company, I have deposited today. Today's date is any one of the 11th August. Now 11th August, just a moment, I have deposited that money. Na? I have written in my cash book. Yes, 11th August, I have deposited that money. So bank account credited by that much. But bank deposited that money in my passbook or credited in my passbook after 3 days or 4 days. So the days, 4 days. Now in 4 days, this money, whatever I have written in the cash book and the passbook, it is not tallied. It is not same. So discrepancies is between that 1 day, 2 day, 3 day, 4 days, like that. If it is happening again after 4 days, if it is doing sorted out, that things is okay. But if it is not sorted out, the amount or gap can be huge, and that can be started that dispute between the two parties. So very, very important that to be find out that both the amount, both the cash book as per the passbook, the amount whatever you have, that is exactly correct. Or if any discrepancies is there, what is the difference we found, what is the reason behind it. Next is that regular reconciliation discourages embezzlement. This point I told now, that there will be dispute and all the things not to be happen between. Next, reconciliation help to verify the accuracy of entries recorded in the cash book and keep track of checks, draft, etc. Whatever that you have deposited, every time it could be tracked. Done. So these are the four main reason behind it, that why we are doing reconciliation. Okay. Now, reason of difference between the balances as per the cash book and passbook. What are the reason behind it? Why could be happen that? How could be happen that? We are going to see one by one. One is that difference due to timing in recording entries. Timing in recording entries. Think about that. Check issued but not presented for payment. I have issued a check. I have issued a check on 11th August. But that person I have issued, that means of what? I am ready to pay that money to somebody, and that somebody not visited yet to the bank to encash. So I have issued that 11th August. So I have already subtracted that money from my cash book, but the person is still not visited the bank. When the person is not visited the bank, definitely that means the person is not withdrawn that money from my bank account. So it is, if I'm telling also that yes, I have subtracted that money, but from the passbook it is not subtracted yet. Correct or not? So definitely again, between the two passbook and cash book, difference can be arises. Next, check deposited into bank but not cleared yet. That is also another point. I have deposited again 11th of August. It could be possible that amount be encashed, or can say that deposited or credited in my account on 15th of August, 16th of August. In between 4 days, 3 days time, they are taking to be credited that amount in my passbook. Due to that, also the differences you can be find out or can be arises. Point number 2, transaction recorded by the bank but not by the account holder. Before, what we have seen, that point number 1, transaction done by the company or account holder, not done by the bank. That is also one point. Another point is that here transactions done by bank but not the account holder. For that purpose also, that discrepancies or the changes between that you can be find. Next, what is that in between? Interest credited by the bank but not recorded in the cash book. Now think about a bank interest credited to your account. That means passbook already amount increases. Passbook interest already you added, credited. Got my point? Passbook, that means bank credited, that means bank already added. I already told you. Passbook debit means subtract, credit means add. So that passbook credited, that means of what? Amount already added. But you unknown about that, no? Bank credited that money to your passbook. How the company bechara knows about that? When the company got to know that, yeah, after 3 days or 4 days, when the account paper or soft copy or in the form of message they received, then only they got to know. Otherwise, no. So at that point, that bank interest credited, but the passbook already credited, but cash book not. For that purpose also, the changes can be arises. Bank charges, interest charges again. Sometimes bank charges, bank reduces. That means bank debited some of the amount from your account. Debited, that means already subtracted, as in the form of bank charges, interest charges. Interest charges in which condition? Definitely when you taken any loan or overdraft, right? But you are unknown about that, right? You can be find out in this. Next, interest dividend collected by the bank. Yes, you have invested some of the places, or some of the company. So from that, some of the dividend collected on behalf of you. Dividend collected, that means of what? Passbook already credited. Correct now? But you don't know. Correct now? So you have not debited yet. Okay, that means cash book not added yet. That is also another point. Next, direct payment by the bank. Sometime what happened, you already instructed to the bank on behalf of me, any one of the expenses supposed to do, now you can do, like electricity payment or any other expenses you can do, or CEO of the company visited to the bank and directly a standing instruction given to the bank, please pay such a amount to such person. That's it. So the bank paid that money, but company in cash book not recorded yet. Can be reason, right? Apart from this, direct deposited into the account. Now think about direct deposited into the account. Now some of the person, some of the debtors, that you sold some of the goods to the person and the person not paid that time. The person told that after 5 days, 6 days or 10 days that I will come and I'll pay that money. But that person not visited to you. The person directly pay that money into your bank online or any another check or any method. So directly the person deposited into your bank so that your passbook already credited, but cash book not. Clear no? So for that time also the changes can be happen. Next, dishonored of bill discounted. Now this point is little bit important. Now think dishonored bills discounted means what? Simple, any condition that you have discounted a bill with a bank. Now point is, what is discounted of bill? You, ABC company and Shreya. Now ABC company have done a deal with Shreya. Now Shreya supposed to receive a money from ABC company for rupees 50,000. Now Shreya, what Shreya has done? Shreya visited a bank and Shreya given that documents. The document is known as the bills receivable. Shreya going to receive, no? I am talking about Shreya. So I am Shreya. So I am talking on behalf of Shreya. Simple. Shreya going to receive that money from ABC company. So now Shreya having a document, that document is known as the bills receivable. Now Shreya visited the bank and requested bank that I am giving this bill to you. That this bill having 50,000 value that you can receive after 2 months. After 2 months. But now at present I need money badly. Can you give me that much of money? Bank will tell that, dear, I can give you, but not full 50,000 because of I am going to receive 50,000 from that person or from the company. So if I am giving 50,000 to you, what is my benefit? Definitely that I will give on discount manner. So that I am giving you 40,000, 45,000 rupees. So 5,000 is my commission, simple way. So that I have done a bill discounted. Who? Shreya has done a bill discounted with a bank. Now, when the receipt time, that is after 2 months, bank visited that company and the company done default. Company not paid. This is nothing but what? That dishonor bill discounted. So simple at that condition of that if the bank not received the money from ABC company, definitely bank will going to make money or going to be find out going to be claim the money from whom? From Shreya only. So that time what? Shreya already received that money 45,000. Now Shreya again going to pay back that money to bank. So now that time also, okay, dishonored the bill. Who will going to find out first? The bank only going to be find out first. Okay, the company not. Company will going to be find out after some time when the bank approach the company again. Okay. Next, bills collected by the bank on behalf of the customer. Again, say bills receivable one was there in customer that given to a bank and told that after 2 months bank please collect that amount from on behalf of me. So that bank has collected that money, but the company unknown about that. Collected money, that means about passbook already credited, cash book not. Clear? Okay.
Yes, sir.
Bills collected by the bank on behalf of the customer. Done. This one. So simple at that way. Remember that if you are passbook if it is credited, cash book must be debit. Then only it is added. Understood, right? Cash book is added means debit. Passbook added means credit. So that whatever the money you have done in debit in cash book, that will be credit in passbook indirectly. Okay. Clear the point?
Yes, sir.
Last one, errors. Errors and omission. So any one of the points, say example, cash book written one of the amount is 50,000. But when the passbook entered it, it is written as a 5,000. Oh my God, 45,000 less because of only 10. So it is also the discrepancies in between that it could be arises. So that is also we can easily can find out by doing BRS. Clear? All the point clear?
Yes, sir.
Okay. Now, if you asking me, sir, how the bank statement or bank reconciliation statement we are making, that we are going to see after some time. Before that, how actually it's seen in passbook and in cash book. Now see, this is the cash book and this is one column only made, and I'm thinking about this is the bank column. Okay, this is the bank column and this is the passbook. Could you find out here? First one is that if it is a bank column, say here I have written here to cash 40,000. Indirectly what? Deposited money, no? What is that? Bank account debit to cash account. Correct?
Cash account.
Deposited money. So how I am writing in passbook? Just you see. In passbook, I am writing directly by cash and it is deposited money here and CR credited 40,000 it is credited. Clear the point?
Mm. Yes,
Okay.
yes, sir.
After that, see here one more entry. Say example this one, furniture dealer. Indirectly what? Furniture account debit to bank account. Correct, no? Furniture account debit to bank account. So indirectly what? That 6,000 you are withdrawing. Correct? 6,000 you are paying through that. So that, say example, to furniture dealer I have written, see withdrawal 6,000. And the total credit value is what now? See here, total credit value again 34,000. So that means of what? This withdrawal means in passbook I have debited. Total credit value was 40,000. After 40,000 I have debited by 6,000. So it become total money how much now? Total credited value is 34,000.
34.
Clear no?
Yes, sir.
But at that point, if you could find out, if you understanding in this situation, here in cash book, there is 34,000 debited value. Okay, 34,000 is debited value. Clear no? Say example, if you not
Yes, sir.
understand yet, see 40,000 was debit, 40,000 was debit. Now 6,000 you subtract. So automatically this side is 34, no? Debit side is more. Correct, no?
Yes, sir.
I have not seen all transaction. You can see
Yes, sir.
this all transaction and you can find out easily. Okay. So this is the way
Yes.
when we are writing two. Okay. Now, presentation of bank reconciliation statement. Okay. I'm just showing the first part and after that moving to the questions. Okay. So first part is that when starting point is balance as per the cash book. Now think about as per the cash book. Now by the time I have spoken with you, when I told about the cash book, so you are the company and you are maintaining cash book. So cash book means debit balance means add or positive number. Correct no?
Yes,
Now,
sir.
one more point as per the rule, you remember that if you started your question with cash book balance, you can change only cash book. You can change only cash book. What is the logic behind it? Simple way that cash book balance, if you have with you, definitely you are the company. Now, if you are the company, you can change your book, na? If any discrepancies you found that as per the other book, then you can change your book. Oh, you found that, oh, sir, this deposited I have done, I have written correctly. So the passbook not written there or not credited, I should go to the bank and I ask to the cashier, please debit it or please credit it. That moment only. They will not do. After processing only they will do. When the processing has finished for their officially what are the things needed, that whatever the things they supposed to do, they will do first. After that, that amount will be credited to your account. Even though if you're going there, it could not be happen. So for that purpose, what is the logic behind it? If any cash book balance, if you have with you, you can change only cash book. Remember that. Cash book balance, debit means positive, credit means negative or subtraction.